Market continues to be volatile. We saw today where people thought we were going to have some kind of crash, only to see us hold a very key level, which is extremely important. But more importantly is, what is smart money and dumb money doing? What this divergence could mean, what the last hour of the day has been telling us, and what it is telling us now. Hey everybody, welcome back to our daily roundup to go over what happened today and what we're going to do about it tomorrow. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely, and all these videos are linked together as you're about to see. So as we go through this line right here, you can see that this is pretty much a trader's dream, right? 4,100 over and over again is resistance until it flips, and then it becomes what? Support, 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 then resistance. Can't get near it. Guess what it is again? Once again, it is now support again. So we are waiting for the big crash. Everyone keeps talking about this. I'm going to explain why I don't think it's coming, and I'll get into it. But I want to just focus on just exactly what the heck happened today. Well, here we are at 10 a.m. and we're selling down, and we're just going to look at the futures market for a moment, because I think it's better looking at futures because it's continuous, and this, you'll get this in a moment. So here we are, and then we sell down at 12 o'clock. 12 is lunch hour. That marks our bottom. What happens at the end of the day, towards the end? Non-stop buying. Okay? So we all know, for those that have been following this channel for a little bit of time, who buys at the end of the day? Institutions buy at the end of the day. So we have a reversal off a key level, and we have buying. At the same time, you have a really classic bear flag sitting right in here, and look at what you do. You hold right in there. Now, there were some signs that we were going to hold, and for those that are familiar with this channel, they all know that I am a pattern trader. So I trade patterns, and that's what I look for. That's how I trade my setups. Now, see this bar right in here at 12:30 today? This is called a spinning top. Why this bar is important is this body. It has a long wick to the downside and a long wick to the upside. And why that's important is because that tells us exactly what we need to know, that we have indecision. Not only do we have indecision, but the body is smaller than the wicks on both sides. So this is called a spinning top. Some people, if it's green for buys, they'll call it a white spinning top or a bullish spinning top. If it's red, they will call that. This would not be one because it doesn't have wicks that on both sides that are longer than the body. But these are signs of indecision. And when you start notifying these indecision signs, you start to understand where you're at, and you can kind of get a sense of it. That's why you always drill into it. Isn't that interesting how that indecision bar became our bottom of the S&P futures market today? So this is always very important for me to notice things like that, pay attention to it, because all this really is just traders and positioning. And then you could also notice right in here, what are we doing? Well, for an hour, we were unable to close under 4,100, no matter how many times we tried. So that's another clear signal that we were probably going to rally at the end of the day. I bought some trades at the end of the day. I did okay. I did not do great. We just don't have the volume going into the weekend. And we're going to discuss that and what you should be focused on tomorrow, and then what you should be focused on next week. So we're holding 4,100. You had 4 attempts today. You have an indecision bar that held, and then you came up, retested that level, and then pushed. Now, the one thing I like to focus on are the facts. I'd rather deal with the facts and analyze than predict what's going to happen. I do think we can hold this level or hold 40.80. That does not mean that I'm right. And we could always have something out there that could be an issue. Speaking of issues, WAL, Western Alliance Bancorp, a regional bank, came out today and said that they are going to show their deposits after they got into a really heated debate about the fact that they weren't going to. Now, I'm going to show the first break, which is right there, and you can see that first break. Then this bar sets us up, giving us this wick using that pivot, and now you can see this break right here, and they're walking us down, right? So we can see the breaks, we can see the inflection points, and what's nice about those breaks, when you mark them off, sometimes you get that inflection point at the same spot, and then you can kind of see where you would have some kind of support or resistance, right? So I think that's somewhat important, but let's just focus on what I think is glaringly obvious, and I'm just going to mark it off right there. Perfect. So here's the closing lows, right? This is our closing low. And here's where we are again, right on our closing low minus this bar. Now, they came out today and said, oh, we'll show you deposits. And they told you what they did from December on. They did not tell you what has recently happened. So this seemed to annoy everybody. And based upon that, they went from, we're not going to tell you what we have to, oh, we'll tell you what we had December 31st. It just looks suspect, like you don't want people to know what they're doing. And the market responded accordingly. We've been talking about what is the wild card that could hurt us out there. And to me, it's still the banks. It's their exposure to commercial real estate, but it's also that they're just not being forthright on the issues. And I think that they need to be a little more forthright on what's actually going on. So we can see the breakdown on the news that they're not going to talk. Then they came out and said, okay, we'll tell you what we are at from December 31st on. And that kind of got us to stay above this level, but we really didn't have any follow through. It actually made it worse. This is KRE. This is the regional banking ETF. And we can see this level of 42 right where you closed. Well, this is the single worst close that we've ever had. Now, some people will say, well, it's green and maybe we're going to turn around. Well, maybe. But for now, you're not able to break that level at all. You keep bonking on 42. And now here you are once again, that 42, that wick, and support, which was support, has become what? Resistance. I don't know how this plays out tomorrow. I will tell you that I think it's very telling that every single hourly bar was unable to close above that 42 level. Every single one, even despite the news. And this has really been our red flag out there, or our wild card. We're supposed to pretend that First Republic Bank, which is the weekly chart, which is down over 90%, that this is normal. And this is not normal. These are not tech stocks. You're not supposed to drop 90%. And they're not really talking about it. Now, since about March 20th, we've been in this trading range. The most troubling thing about this trading range to me is that they just keep giving us these lower highs. That's not what you want to see. That's not giving anybody confidence that you have any kind of buyer out there. And I know that they have the new FHLB window that they're able to go and tap, but for how long are they just going to tap this to stay in business? And it's a problem because it's spreading, because even banks like PACW, who were saying, we don't want to issue capital down here, we don't want to do a secondary, and you can respect that. Why would you want to do a secondary here if you could have done it up here, right? It just makes perfect sense. And obviously everyone's skittish with the banks, especially any West Coast bank right now, because that seems to be where the issue lies in regards to the real estate market, but it's spreading. And I don't want to spend too much time on this, but I want to really hammer this home. This is paying 7.75%. It's trading at 14. Okay, so if you just say that it's supposed to be trading at 25, and we'll just do the math and say that that should give you another 7 or 8, right? Then you have a double-digit return on a preferred. The preferred is trading as if it's going out of business. It's trading as if you're at default levels right now. If you have a 10-year that is plummeting down to 328, and then you are looking at PACW and going, this is paying roughly 14, 15%. Okay, I'm getting 1,100 basis points currently over the market of a 10-year. Now, I understand there's more risk, right? Even here, there was more risk. That's why you're getting 7.75 versus getting the 3. Now, if we look at corporate bond yield spreads, and the reason I'm going over this again is because of your comments. So if you like seeing these and you like seeing the follow-up, please comment. It lets me know what to cover. But I just want to go through this. It's 20 years, BBB, AAA. And this is the spread between them. Tells you the last was 96 basis points. So between a BBB rating and a AAA rating, I have 96 basis points. You can see how high we got, up to 400 basis points during 2009. And during the pandemic, we got all the way up here to about almost a 3, right? So we can see this, and we can see that these spreads widened. This is not even remotely moving to a level that is even correlated to where we were 6 months ago. This is actually tightening, which is telling you that things are getting better for corporations. Does this look like things are getting better for corporations that are in the regional banking space? I don't mean to laugh, but this is something that I was actually picking on. We bought it down here in the Alpha Chasers community, traded up, took the trade. Some of us wanted to hold it for a little bit longer, and it just really just bonked around. And once it stopped us out, it never should have taken out that low. And once it did, it just told us that we're missing something. And that's what is troubling me more than anything, because I'm not getting answers. I'll give you another example. Schwab was one we had another great trade on, rallied up, then came right back down, and then we just got stopped out on the rest, break even. Actually, a little bit better than break even. But the point of what I'm getting at and the point of where I'm going with this is they came out and confirmed their entire financials. They opened up their entire book of business. They showed the world everything. You have the chairman, Charles Schwab himself, signing off on the documents that were released. And the bottom line is nobody cares. So what are they afraid of? Like, what are we missing? I can't imagine that they have some kind of, it's 20% from that statement. I can't imagine they have some kind of such massive skeleton in their closet that this is happening. But we're missing something. TD Bank supposedly has a 10% stake in Schwab. I don't know their current holdings. And the rumor is that maybe they're selling. Maybe they are, maybe they aren't. I have no way of knowing that. All I know is that a lot of this stuff is not adding up. BNKD is the large bank bear fund 3X. Okay, think JP Morgan, Goldman. I have a huge flag right here. Now, if I take a look at FAZ, to put this into perspective, and you can see how we're acting here and how FAZ, which is a much larger financial space besides the large banks, and this is what's troubling. So I look at this, and this absolutely looks stronger than the entire financials. Well, why are the biggest banks in the US looking worse than the entire financial sector? And I don't have an answer to that. And then we're sitting here and we're saying JP Morgan, they can't rally. Well, why can't they rally? I think they can't rally because they're going to possibly be made to purchase somebody. And then you start looking at Goldman. Goldman's rallying. Goldman's nowhere near those lows. So if you were to look at Goldman versus looking at JP Morgan, it's like night and day to me. And I think it's very telling. Now, next week, you have massive release of regional bank earnings. You're going into a 3-day weekend. If you were going to announce that things were bad, there is no better time to announce a merger. There is no better time to announce a miss or a capital raise than a 3-day weekend, so you have extra time to get it together. I would consider that and watch tomorrow's trading and watch which regional banks act the best or the worst. Now, I think there's a couple things, no matter what side of the aisle you're on, we can all agree to. We can all agree that rates have peaked. We can all agree that we might go up or we might go down. We just don't know, right? That's where everyone's head is. We can agree that there's uncertainty, and there's so much uncertainty. I'm going to give you 2 examples that to me are absolutely mind-boggling. But I want to just talk about the basics. Here's your support line. Support, resistance, flips it, the retest, look where you closed. This absolutely could have broke down. Well, here's your breakout bar. How did we respond to the breakout bar? And what we do is we just take that low and we draw a little line, boop. How did we respond? Well, we did fairly well today, didn't we? We were unable to break below that. A matter of fact, you almost have a hammer here. I'll go back a little further so you can just see this goes all the way back to January 2022. And if you just look at this, I mean, it's pretty telling. You know, I think that these are things that you have to really start asking yourself a question. For example, like here's January 2022. And we're going to go right here, and I just want to show you this. Okay. So this was your anchored VWAP from 22, and you can see how you're acting and where you're at right now and how that was a battleground in here, right? Couldn't flip it back, tries to flip it, couldn't, breaks out over it. 1, 2, 3, 3-bar pattern that we talk about all the time. And then it lifts, right? So you start looking for this and going, okay, well, we know that we're above on the 23, right? We know that. So here's the 23 from when we started, 22, 23. So in here's the pinch, right? The VWAP pinch. Take the peak. So let's take that peak and then you see where you're at. Okay, so we know where we're at from this peak. We know where we're at from the most recent peak, and we're above all of them. Now, why is that significant? Well, that means that the average person of any of those places, if you're in from 2022, if you're in from that peak, if you bought in 2023, you're up. You have no reason to sell this. Now, NVIDIA and the idea that AI all of a sudden is not going to be as lucrative as we once think. The bottom line is in October, this was where we were at. We were 113 and now we're here. Okay. So now you're up 127% on this idea from the bottom to where the high is. So a lot of people don't like that, and they really hope that these things roll back down. And I'm just going to tell you the obvious, that the market could care less what we want. It's going to give us what it wants to do, right? Let's get rid of these dividends. That's going to bother me a little bit. So we have our line right here, and we can see how perfect our line is. So as we look at our line, we know that this is going to be a demarcation spot, right? And we've rallied through everything. And I just want to point out what I think should be glaringly obvious to everybody, is that if you look at that from 23, all we do is pull back and go up. We pull back and everyone says, oh, that's it. Earnings come out, goes up. Oh, well, that's it. Pulls back, goes up. Pulls back, goes up. I'm having a real tough time understanding why people think they're going to call the top when they didn't call the top 2 years ago and when they didn't call the bottom. And I would not be trading like that. Are there going to be pullbacks? Yes. We've talked about this in last Saturday's video. But you get signs like this. This was pretty glaring to me, where you have a little wick up here and you have a little wick up there. This is actually called a tweezer top, and I'll just walk you through it. You need the first one to be green. The second one's got to be red. And the highs of these, when the high of this one was, let's see, 280, the high of that one was 280. So they actually were identical. So you had identical highs, green, red, tweezer top. So you're setting up for some kind of weakness. It's not the end of the world. I mean, this bar right here was telling you were setting up for weakness, and it lasted a total of 3-4 days. So I think we just have to kind of check ourselves a little bit on what our expectations are, okay? The idea that you're going to see a 2000 or 2020 rally, I should say, is probably not realistic. You're probably not going to see that again in your lifetime. And I think people are going to have to deal with that. You know, it took me 20 years to see it again. And the one in 2020 was half the power of the one that was in 1999, 2000. So just keep that in mind. Now, I like these names. I think they look good. But on semiconductors, 440 is a key level. A matter of fact, this whole area in here from 440 up is a key level if you really look at it and dig into it. And it's going to drop that right there so you can see. And it's just been a battleground of support and resistance, just battling over and over again. Does that mean it's done? No, it does not mean it's done. It just means that it might need a rest. Every single pullback that we've had has only done one thing. That one thing is that it's gone higher. Ever since we had that print in October on CPI, which is right here, okay, that's the October print right here, that move. Ever since we've had that, we've had one glaring factor. That was it. That has been the bottom across the board. This is when CPI flipped. Okay, this is exactly when it flipped. Just like when we flipped up here. Okay, this is exactly when we flipped, right? This is when we flipped again. People waiting for this to hit the new high and break out, breaks down. This time we're going to hit the new high, and you're waiting and you're not understanding the game's changed, right? The whole time you're not understanding the game's changed, and you keep waiting for that breakdown, but you're not understanding, or I should say that we're not understanding, or somebody's not understanding that the game has completely changed, and it's about what the Fed is doing. And we are on the tail end of what the Fed is doing. We are not at the beginning end of what the Fed is doing, or the beginning of what the Fed is doing. Let me give you another example. There are three sectors that rally: XLC, XLK, XLF. Now, those three sectors rally when you end tightening. And what are you seeing right here? You are seeing a rally in XLC. Well, what names would they be? You're seeing names of the rally in Meta. We're seeing how Meta continues to push up. We're seeing how Netflix continues to push up. All of a sudden, Google is Google again because AI is bad, right? So now we're seeing this setup. This is constant. These are the new leaders, and this is actually doing substantially better. Let me give you an example of what I mean by that. Here's XLC. So if we just take a quick snapshot here, we can see in blue we have the XLC, in orange we have the XLK, which is your Apple and Microsoft, and the XLF. These are your three signs of what is supposed to move when you are going to go through the end of tightening and the next cycle, which is bonds outperform first, and then stocks will start to outperform. But it's bonds first, and the part where we're at in the economic cycle right now, and we'll get into that in a moment. But you see where you're at right here? So 23 on, and look at the rip. Look at how XLC is just crushing XLK, and XLF is having issues. Now, I think it's going to be XLF. Is going to do even worse, because no one is going to want to own those names. They're going to want to own XLK and XLC because there's too much uncertainty with XLF. So I expect an outside move in these two sectors. That's how my account's positioned, and that's how I'm positioning right now. It just makes a lot of sense to me. Corporate bonds, we know exactly what's going on, right? We can see this really clearly right here. As this rallies, well, the S&P is supposed to be going down. Is it? Not really. So as spreads get wider, the S&P is supposed to be going down. It's not doing that. It's doing the exact opposite. As it's dropping, this should be going up. It's not really doing that either, is it? So it's not really in line with what it's supposed to be doing. Now, why is that? Now, in front of us is TLT divided by the S&P 500. What is this showing us? This is showing us pretty clearly that TLT and the performance relative to the S&P. And you can see that for a period of time during the pandemic, well, bonds completely outperformed, didn't they? And then you can kind of see how bonds no longer outperformed and the S&P just crushed. And then where is that bottom where the S&P was absolutely crushing the TLT? And you'll note that that is right around where the market hit the bottom, right? So the market hit the bottom right around the same exact time that this happened. Now, isn't that a coincidence? Let's make that even better. There it goes. So what are we starting to see here? Well, we're starting to see a little bit of a divergence, aren't we? So you have your line there, and then all of a sudden you're setting up here, right? And then you just kind of drop in your trend line. Let's just put it right there for a moment. So we can see where the top of that is, but we're no longer hitting lower lows on the TLT in regards to the S&P. So are we setting up to turn? I think we are, because what starts to happen, and the reason that bonds outperform before stocks at this part in the economic cycle, is that people start to realize that they're never going to see these kinds of yields again. So if we take a look at the 10-year and we just mark the high and we'll try to figure out where that is, well, that's October again. Well, that's the exact inverse of what the market did. So as soon as they started buying bonds, what else did they start doing? They started buying equities, because remember the S&P, that's where we bottomed before. Now, you come straight across and you can see this little battle going on. And you can see the breakdown here. These are always great spots to look and see how you act when you get to that level, and you can see how that played out. So now we're breaking down, right? And we're rolling and we're getting into these levels. Now we're breaking lower lows. And then we can put something as simplistic in as the 200-day moving average and get a look at that. I don't really care about volume when I'm looking at this, but let's just throw this in so we can see the 200. We can see how we're breaking that 200-day, right? Okay, so now they're buying the living heck out of bonds. And if we just go and take a look at, well, I'll just take it from here and just drop it straight down, and you can see what? You're up 16% if you were buying the 10-year, okay? You're up more now than if you were buying the S&P. Bonds are outperforming right now. Now, bonds are outperforming. That's based upon what's going on with the market. Is data good? Is data bad? One day it's good, one day it's bad. Bad is good, good is bad. People have had it, right? So you're starting to see uncertainty. That's why you're seeing Bitcoin move the way that it is. It's why gold is setting up to start taking out all-time highs, right? If you start taking a look at gold and these levels that you're at right now versus where we just closed, you realize you don't have much up here, guys, as far as where you're going to go next. I mean, if we just keep going back, let's do this on a weekly. It'll just make it a little easier for me to show you. But you start going back here on the weekly, and there's not much out here, guys. You only have a couple spots before you're hitting all-time highs on gold. So I don't know why you would think that you're not going to hit all-time highs on gold. I think that it'd be a great time to do that. You're seeing a ton of uncertainty out there, and I'm going to show you what I mean by that. So I see a lot of opportunity, and we've been taking advantage of some of it in the community. For example, we did this trade 2 days ago. WWE's getting bought out, right? And when they're getting bought out, we're in right around, I think it was like 85, 87, somewhere in here. And the news comes out. Well, WWE's market cap and EDR, who's buying them, are roughly well, let's leave it this way. They're very far apart. Right now, they're about 28% still apart. And what's fascinating is people are not understanding that this deal is not of equals, because EDR is going to be the acquirer because they're getting 51%. WWE is getting 49%. But what's happening here is the spread on this deal was so weak because nobody wanted a deal when they thought they were getting cash. We were supposed to get cash from the Saudis. That didn't happen. Everybody panics and they get out. They don't read the terms. They just get out. Scared money, right? This was a classic example of scared money. When you see scared money like this, it presents a huge opportunity. This was something that I've been in. I added yesterday. I've added today. I put the whole the note out on Twitter. I'm not going to bore everybody with it again. But this is something that is completely misunderstood, and people are not understanding this merger. And they're not taking the time, and they don't care. They didn't get cash, and they're on their way out. But it's not just this deal. It's also cash deals. This morning, LMNL, right in here. See this level? See you're bouncing, trying to rally, bounce, pulls back, tries to, can't get through. Bought for cash. 750 cash is the offer. They haven't accepted the offer. It's a non-binding offer, but it's significantly more than the company was worth, so they're probably going to take the offer. The discount that this was trading at all day and pre-market and where it went to is absolutely staggering. And I think that people are just so afraid that it's presenting huge opportunity. For us, this presented 3 spots where we were able to buy this today and get out. And all we did was just assign a 5% value to it and then just watch the line, right? So in other words, time value of 5% for the deal to get done. And then all we did was just come straight across with the line, because it might take time. You never know. But if you're looking at that level, you can start seeing where they're buying, and then you just start buying there as well. And it presents a huge opportunity, and it did here for us, to get in the same exact trade 3 times and to pull money out. Why? Because people are scared. Normally, when you see a merger, this is not how mergers act. They just get acquired, and then the stocks just will automatically go up. But if you take a look at where you started off the open, let's do the open right here, and then you realize that you're looking for 7.5 as the cash level, okay, you're looking at a 21% return off the open on a cash deal. That's how scared everybody is right now. And then when they got up to this level, they didn't want to wait, right? So we started to mark off those levels so we knew where to get out. But 21% on a cash deal, if you had to wait a year, you're getting double-digit returns. ATVI is being bought out. I think it's 95 or 96. Just mark that off here so you can see this. Okay? And this had some hurdles. Right? This had some hurdles, but you have Bill Gates in there. We have Warren Buffett. Look, guys, they're going to get the deal done, and this is going to get acquired by Microsoft. It's just a question of what they're going to have to divest to do it. You're still trading at a 13% discount. And this is a much clearer path to, an end result. It's silly what's going on out there right now. But that silliness presents opportunity, and frankly, we're taking advantage of it right now. Make sure you subscribe to the channel. I'm going to go over this in greater detail, but I want you guys to know this for tomorrow so that you can see. This is the last hour of trading. Now, what we're seeing with that last hour of trading right here, and they sign a number to it. We've gone through this before, but I'll walk you through it. Essentially, what they're doing is every time that you uptick and it's +1, we go higher. Well, this move has forecasted the entire move from the last hour and what the S&P is doing. What is it doing now? It's exploding to the upside. This means that institutions are still buying at the end of the day. Now, here's what's fascinating. The smart money, dumb money confidence index, and as you know, we don't call it smart money, we call that institutions, and we call that retail. So as we zoom in on this, and we're going to go out a year here and just look at this really quickly. And you see how we crossed here and how retail outperformed as institutions sold and what happened in the market. Look what's happening again. We're crossing again. Now, how far are institutions going to sell down? I have no idea. How much is retail going to buy? Not a clue. But I will tell you that you are seeing the same exact pattern that you saw last time where retail outperformed. Okay, so now we're at the bottom right in here, and institutions look like they're getting a little goofy in here, don't they? Right? That's why we don't call this smart money, and we don't call this dumb money. So they're buying at the bottom in here, 317 on, versus the people up here that are selling into that, right? So I think this is a very important distinction to make, and we're going to have to watch how this plays itself out. But I think that this is pertinent. Please comment on the video. Let me know what you liked, what you didn't like, and what you'd like me to go over. This weekend's video will be longer and more in depth, but I figured I wanted to go over as much as possible before the close tomorrow and the 3-day weekend. Have a great night, everybody.